Hello, welcome to Pro Trader Strategies Market Commentary for Thursday, March the 12th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talked about everything from economic to geopolitical and, of course, market analysis. I'm here to do those same things in these daily market commentaries, but I layer on top of that some option strategies that you and I can use to implement into our portfolios in order to increase our probabilities of success going forward. May not feel like it right now with the markets the way they are, but it will work itself out, and we will come out of this relatively better off than what we were. This is opportunity as far as I'm concerned, you guys. But please remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, with that out of the way, let's get it on with the economic data, which doesn't really mean anything at this point, right? Because everything that we are getting as economic data is in the past and what we already know in a sense, but going forward is what people are fearful of, and that is the unknown. The unknown is scary, you guys. Nobody knows what's going to go on with COVID-19, C19, coronavirus, whatever you want to call it. To me, it seems like it's a little bit overdone. I could be off my rocker. Yes, it is more contagious than most other flus we've seen, but I think that the people are going to come out of this relatively unscathed for the most part. I think the fear is what's scary right now. People just don't know. There's so many conflicting reports. You start seeing governments shut down, Italy on lockdown, the United States banning anybody from Europe coming to the United States, except for if you're in the UK, you guys get to still come. So a lot of things happening, NBA closing down the rest of the season. All of these things are causing this recessionary impact, and it's going to probably put us into a recession, you guys. How bad is it? At this point, I'm still looking to add to my portfolio. So without further ado, let's get on with it. We got some core CPI, PPI, Producer Price Index, which was negative 0.3%. We're going to see those numbers really come off as demand starts slacking, and we're seeing crude oil continue to suffer as well. Somebody was talking, they were even talking about putting a tariff on oil, which would drive prices higher, help out some of the frackers. I don't think that that's a good idea right now because I've talked about this. We need to create the velocity of money. How do we do that? One thing is cheaper oil prices, some of those things that we are constantly buying. Another thing they're talking about doing is doing a payroll, getting rid of the payroll tax, at least for right now. That would give everybody some money in their pocket that would be spent differently in the overall economy. So more money to buy toilet paper, I guess. Also, natural gas storages was a drawdown of 48 billion cubic feet, expected to be 55 billion cubic feet. I don't have a chart for natural gas because I really don't trade that. But one of the things that we're seeing is, despite the fact that oil is going down, natural gas is actually getting a bit of a spike here because of the fracking operations pulling back on their operations and expected to go to the minimal production there. That's where we get a lot of our natural gas. So that we could still see some prices of natural gas go higher as we're seeing some supply limitations in that area of the energy sector. I've always said with the fracking operations, they should be mandated to capture all of that natural gas, but that's a different soapbox for a different time. That's pretty much all we've got, other than you're listening to global leaders today talk about what's going to go on. So let me get through this because I have done a lot of moving and shaking this morning, moved some money over into my trading account, and am adding some positions today with this big downturn again. I'm going to continue to start looking for opportunities and selling these 16 Delta puts dollar cost average as we go. I don't think we're going to see this last for a super long time, but I could be wrong. All right, so we've got crude oil off by almost $2, still in the 30 handle, but barely above that. We've got gold off by $69, $70. What we're seeing here, I think, is somewhat of a capitulation type of environment happening today with even some of the news. Yes, there is fear. I think retailers are starting to dump their stocks and things of that nature. But when we're seeing equities down as much as they are and there's no flight to this type of safety, a lot of these funds and investment firms that are highly leveraged are having to liquidate some of that stuff. They are seeing that they have to raise capital in a sense, and that is coming from dumping out any asset that is doing well or has done well for them to meet these margin calls that they're getting hit on for various reasons. So that's why we don't want to over leverage ourselves. When I'm talking about selling options, you need to be careful, because you need to know when you're selling puts or selling calls that you are likely to, or not like when you're selling my strikes, you aren't likely, but in this type of environment, it's more and more likely. But there is the probability that something like this will happen and you will have to actually buy that. So you need to have that money ready and available. When these leverage guys are going in there, they get a lot more leverage than even you or I. So I think that that's what we're seeing here in gold with it coming off. Volatility starting to spike again, despite the fact that we're seeing gold go down. A lot of times we see that volatility spike as gold rallies. So interesting to watch that. So gold coming off, and bonds, we can call them unchanged right now. They were coming off a little bit. As we approached those negative rates. The talking heads, or at least the ones that I listen to, don't believe we're going to go into negative rates, and we are very close to going to at least that with the pricing. We've talked about 10-year being, a 0.3 handle, which was below Fed funds at 0.5, right? So, and I don't think that the Fed is probably going to cut rates again, but, who knows? I don't think they should cut rates. All right, VIX spiking up in almost to the 70 handle, as you can see there, as the fear really starts taking hold here. We've got the Dow Jones. A lot of the equities, we had a circuit breaker stop here earlier this morning, almost right off the open. Dow's down 2,000 points again today, after yesterday's big sell-off as well. So another massive sell-off. I think this is a lot of capitulation as these guys that are getting leveraged, we're getting margin calls and have to lighten up on positions, and that is puking out on that. All right, we've got the NASDAQ down 650 points below the point of control where the most time and volume has been spent. When I've talked about that, we're getting down to these levels. People are seeing that they were profitable, and now that they were at the point of control, they are dumping. They're selling with both hands. And, I always talk about this, when there is fear in the markets, that's the time to be one that, is taking advantage of those fears. E-mini S&P is down 238 points on the day, well below the point of control here. It's really getting beat up below the value area low, below my Fibonacci's that I have set up for the lows of basically the last 52 weeks. So market's really getting overextended here. Doesn't mean this is a low area. No, it doesn't necessarily mean that. We could go a bit lower, but these are times to really take advantage of some of this in my eyes. So that's what I'm looking to do. Like I talked about, rolling some money over into my accounts. All right, we don't really need to see the E-mini S&Ps. They're continuing to slide. All right, let's get into what I've done. MasterCard, you guys already know I am short the 270 puts in there. I decided to go in and add some more to this. Actually, I did a couple of things here in MasterCard, and I went in and sold the went into the March in MasterCard and sold the 215 puts in there. As you can see, that's a little bit below the 52-week low, and it's going to line up on what I had set up from last year's low. So the 215 is right in and around that area below the point of control. These are things that I think that even if people are staying at home, they're going to be online buying, using their credit cards. If we start seeing people lose jobs and things of that nature, they're going to be using credit cards. So I think that the credit card area is something that could be a good opportunity here. So those 215 puts, I was able to collect $4.15, which drops my break even on those down to around the let's just call it 211 area. Dollar cost averaging with what I already had on with the 300 calls, which I'm likely to have put to me, right? I'm going to be long at 300, which is quite a ways above where we are currently, especially with this big move down. I also went in and I'm short the 270 puts. So those 270 puts, I'm going to be getting long at 270 and hopefully not necessarily long at 215, but sold those 215s just to do some dollar cost averaging. And I also went in and sold the April 300 calls in there and was able to collect $2.08. So the market really snaps back. I've got on that really wide short strangle and some extra short puts in there to boot. All right, so trying to capture this rally. If it goes up, I get put the stock and we rally up. I'd be happy to be out at 300 in my MasterCard. In Microsoft, again, staying with the mantra of what will people continue to use computers. Microsoft is not necessarily going to have a major supply chain disruption out of China. So I went in there and sold some March, sold the 126 puts in there for $2.10. 126 puts me down here, below the point of control, and dollar cost averaging with what I already have on. I'm short the 160 puts originally there. So those are likely to get put to me, so I'll be long at 160. And I again went in there and sold some calls against it. I'm not trying to cover the entire position with these covered calls, but did go in there and sell some calls with Microsoft at the 185 calls in the April. Was able to collect 55 cents for that. So again, putting on that strangle around it and or a covered call strategy if those stocks get put to me in Microsoft as well. Also, Facebook. I went into Facebook and added to this position as well. And Facebook, I originally had sold the 175 puts in there. As you can see, I'm below that area. Decided to add into that position and sold the 142 puts, all in March, you guys. So hopefully I'll get that, March to come off as well, and all of this stuff will lower my cost basis on these trades. And those 142 puts, I was able to collect $1.92 for it. So again, would average in on that. Not adding as much as what I already have, but just slowly kind of trickling in there. If we get another downturn, I'll have some dry powder to be able to add to this. And then in Facebook, I went in and sold the April 200 calls in there for 85 cents. So again, creating that area where it's more of like a covered call strategy. If I get long at 175 in Facebook, Facebook is another thing where I believe that people, if they're stuck at home in quarantine, are going to be using more. Yes, they might be losing some advertising dollars, but I think that they will gain that back in viewers and things of that nature, be able to drive those prices higher. So creating that strangle and or covered call type strategy that we're looking at for Facebook. Netflix, another one. I think people are going to be at home watching Netflix. That should drive their viewership. Was going in there and I sold the March with, what is that, maybe 10 days left to expiration. March, sold the 275 calls, or 275 puts in there for $3.05. Again, very small, just throwing some things out there. And then I bought SPY, very small, just to say I bought it, to be quite honest. And I bought some SPY, which has actually gone against me since where I bought that. I bought the ETF of SPY at 257.52. So you can see there, about $6 below where I originally had bought that. And I think that's about all I've done. Oh, EA Sports. Let's throw that up there, EA Sports, I went in and sold some puts in here as well in the March. Sold the March 89 puts in there for $1.81. Again, moving off quite dramatically here. Those 89 puts puts me below the value area. Yeah, it is really close to the point of control, but the value area being below that with the collection there gets me a little bit further down as well. And then that is about it. That's all I've done there for the markets. Added a lot today, but like I said, doing it very, very small compared to what I was getting into earlier. So going to stay with it and try and keep mechanical, lower cost basis on this stuff, and throwing some covered things on some of those ones that might not get that V-shaped recovery that I was kind of expecting from all of this. Thought it would blow over a little bit quicker than this. All right, that's all I got for you guys. Check out today's webinar. I'm going to stay with this. We're going to be talking about the environments that we can take advantage of, when and where it's appropriate, and why we're doing that. If you haven't been doing those covered calls like I started with a long time ago to lower this cost basis, you're probably kicking yourself about it. I even did the puts, the long puts that we could have been implementing. I didn't implement very many long puts around those, but that was an opportunity, especially with this expansion and volatility. You would have done very, very well with those. And the last week we just did the collar around underlyings that we already have, where you are selling a call to finance a put. And you know what? Some of those puts are probably becoming very close to being tested from some of those strategies we were looking at as well. All right, that's all I got for you guys. Other than, if you can't, before we do that, we do have to talk about this disclaimer. We are an educational company. Anything we talk about in this is not a solicitation for you guys to go out there and living off the cliff. I might be very well wrong here, you guys. I hate the herd mentality. I want you guys to do what your gut is telling you. I always talk about that as well. I started out college with psychology, and your gut is telling you something that you should be paying attention to. So make sure you keep that lockstep. All right. So everything in this webinar is for educational purposes. There is the possibility of losing a lot of money, especially in these markets. So make your own decisions. Read over this disclaimer, and see you in the webinar this afternoon. If you can't take that, take it easy.